Hello, this is Peter Bell, and I'm here with Mr. Christian Easterday from Hot Chili. Hello, Christian.
Hi, Peter. How are you today?
Very well. Nice to be talking to you for the first time. I had the pleasure to follow Hot Chili for a few years via the Sprott Symposium. Great event. Always great to hear more about what you guys are up to at that event. Recently went back and listened to your speech from 2017 and realized that I missed something substantial back then, then talked to you this year and was even more impressed. Congratulations on some progress, it would seem, let alone being a survivor. Both of those are big achievements.
Well, yeah, that's right. Firstly, making sure that we're here into the next rising copper cycle as one of the large developers on the ASX. But most importantly, I suppose, it's the restart strategy that Hot Chili has been at for some 18 months, and we've just kicked a very big goal with the drilling of our first of our high grade, which we've consolidated in the last 9 months or so. Very pleased. The initial results at San Antonio, and I imagine results coming out of the remainder of the drilling program, the 5,000 meters we've just complete, will be equally impressive.
SAP 37. I'll be waiting to see what comes out of that hole.
Yeah, well, hopefully we won't have to wait too long. But yeah, I think there's a real feeling that firstly, this old mine that produced some 2 million tonnes at 2% copper and 0.3 gold from very shallow depths over a reasonable strike length. I think we're probably looking at confirmation very shortly of a major extensional discovery of that mine. So the widths and the grades that we historically mined and actually are currently being mined by owners on the property during our option that we have on it. I'm sure that these results give us confidence that those widths and those grades persist at depth and probably also starting to grow along strike.
To hear you use the word restart is interesting to me, right? I think anybody who'd have any familiarity with the story from Productora days would be thinking, waiting in the wings development story. But something's changed here. These three-stranded mines that you talk about, El Fuego, a very big shift. And people can educate themselves to some degree in the materials on the company website. Lots of great info. But if I could just push on that detail about the lease miners who are there now, is there any kind of further information you can provide around what is going on with them?
Sure. Well, they've been a very, very handy addition with deal structure. They assisted in ensuring that original owners, the family-run mining families that have run these things and derive an income from lease mining activities. So the three deposits that we've secured, sitting within trucking distance of our large asset, Productora, in some cases owned for 100 years privately. Their income from lease miners that send their ore to a very high-cost, low-tonnage just to the north of Productora in the town of INR, and want to disturb that, and that assisted us in getting, option agreements for 4 years to earn, up to 90% interest in these projects, but all of the payments in year 3 and year 4. So effectively a free option period for 3 years to explore and assess these projects in our own pace, low cost. And the only thing that we gave them was the ability for the lease miners to continue mining. That had a huge benefit, not just for the deal structure, but also in providing real-time mining information coming out of these mines, where no resources are established, and we have persistent high-grade production coming from these things over very good widths, up to from 7 meters up to 30 meters width.
Wow. And the Inami plant, I saw mention of that in one of the slides, but I couldn't see it on a map. How does that fit in?
Well, it sits about 15 or 17 meters to the north of Productora. Productora is sort of what we've positioned as the centre of our production hub strategy, and up to the north in the town of Inar, which is a town of about 50,000 people on the coast of Chile to the north of Santiago. and it has a government-run processing facility that treats all of the local miners' ore. So the three deposits in Lulu, San Antonio, and Valentina that we secured options over, really to bring together not just Productora, but to really, bring together all of the high-grade producers in the area and determine whether we have multiple high-grade ore sources available. And that's something that Productora as a development has never had access to before. So, those mines already provide a portion of the feed to that very small 300,000 tonne per annum sulphide plant.
Yeah.
But of course, at that scale, they are charged often up to towards 1.6 and 2% of their head grade. So the lease miners, have a difficult time there with a high cost that's really quite small and I guess takes a lot of their profit. So what we've effectively done, and I've sort of said this in a couple of talks later, we've effectively blown the trochus shell, so to speak, and called to arms all of the local family-run mines to join Productora and produce what could quite a substantially larger towards 100,000 tonnes of copper per annum, but more importantly, adding grade into our bulk tonnage 0.5% development, is a real sweetener. People talk about leverage to things such as copper price as being the obvious leverage that large-scale developers have into this rising cycle, but copper price works just the same as grade. These are direct revenue items. They're the most sensitive items that a company will look at in developing a project, and to finally have confirmation of access to large sources of high grade, open pittable within 20 kilometres of Productora, it's an changer, our strategy, and succeeds, and we're starting to see, some very early fruit being born.
Certainly. Stunning strategy. Not something that I've ever seen before for a company, going through the development phase of things with a large asset, quite like you have there with Productora. The only other person I've heard mention blasting the bugle call, so to speak, in the Chilean family copper miners is Rick Rule there with Sprott Resource Holdings. I had an interview with him at the tail end of the Sprott Symposium. I was asking him about that company, and he said, we're going to try and go in there and consolidate some family-owned Chilean copper mines. And it's striking to me with news headlines of, strikes here and closures there in Chile. It seems it's tough times there, and a lot of people, I would think, are running away from the country. Impressive to see you really assemble it growing in a meaningful way.
Yeah. Well, if you can build a stable which already has a sort of 70,000 tonne per annum stated, pre-feas complete project, that needed a little bit of a kick with grade or a little bit of a kick with size, the economics at $3 per pound looked strong for our targeted 17 years mine life. We have 10 years at this, but adding 10 or 20% grade at 3-4 times the grade of Productora, that's a huge impact on production costs for our stated large-scale development, and being able to get your economics to push cash costs towards $1 per pound. Those are the type of things that insulate and promote projects to be built into mines. So, we're certainly going to use this strategy to make our first leg up on the economics before we commence the definitive feasibility and put this to the final finish line. But I guess, we've been very clear in a lot of our predictions that we're not finished with consolidation. Just as Rick said, sitting around Productora are a lot of opportunity. We've been in discussions with other parties for months, so hopefully we're able to also bring further consolidation to the area, and you just never know what the Chilean families hold, particularly through the generation of mining that these guys have undertaken over some of their private lands.
Certainly, yeah. I would think that there's a wealth of knowledge there, and I would hate to see it lost to the wind in some way by some, drama or collapse or problems in the Chilean mining industry. I've seen some statistics on the monthly layoffs that have been going on there kind of for years now, and I was surprised. It seemed like an industry in peril to some degree.
Well, that's right. I mean, you have the obvious, the obvious issues with the unions and the labour market in Chile. Having a high expectation. It's a country very tied to the copper price. Over 30% of its GDP from copper. So, when you have that kind of exposure, the impact of copper price has a telling sign on the economy. I think that the last time Escondida had a strike, with some 1.2 to 1.3 million tonnes of copper production annually, it actually impacted the quarterly GDP of Chile. So, with a rising copper price over the last 8 months, outside of the last 4 to 6 week trade tensions, the copper price is generating a lot of income in Chile and expectations. So, that needs to be tempered against really the pressures on the Chilean copper industry, and those pressures really talk to supply. You would have heard a lot about Codelco's move to really just put a lot of investment into their aging mines just to maintain production. That's a significant drain on the state, of course, but it also goes to the heart of the issues in the Chilean copper sector, and that is really to do with a lack of new large-scale discoveries and developments, and more importantly, a declining grade across that new pipeline of projects and indeed at existing mines. And I think that has been also exacerbated by mining companies over the past 4 years really starting to increase their head grade of production. It's a technique in the industry we all affectionately know as high grading, and that allows them to insulate themselves against those price cyclical lows. But unfortunately, Peter, as we all know, after being in mining for many years myself, you have to pay the piper. And when prices go up, mines start increasing their overall volumes of production, but also lowering the grades. So we saw back in 2014 a global average head grade of production for copper, and this is globally, and it's truly reflected by the Chilean mines themselves, being almost a third of the global production from scale bulk tonnage mines. We saw that grade decline to about 0.51%. I note that we had a in the head grade over the last 4 years back up to 0.7%. So that tells me that my assumption that high grading was at play over that time is correct, and that also tells me that what we're going to see is continuing decline now, back towards 0.5% as those mines start to take advantage of the higher prices and ease up on pillaging their mines of the better material.
Well, I had the pleasure to attend Whittle Consulting money mining seminar or integrated strategic planning there last week in Vancouver, and talked at length with Gerald Whittle about exactly this, changing prices. What do you do? Interesting to hear your notes there on what happens at a macro scale. Very kind of controversial and important, contentious issues, really globally. People may not always appreciate, but very much at play. And it's nice for you guys to have some levers there where you can look at the high grade deposits and the lower grade stuff and product, and you can blend things as you wish. I can't quite imagine what the mine plan for you guys will look like here in the economic when you get to it.
Yeah, well, we do a lot of financial modelling on our business cases that we set when we're developing these strategies, and of course, we firmly understand what 10% feed at 4 times the grade of of our 0.5% deposit, looks like on the economics, and that's a 30% lift in metal production for the same scale, and it can measure a 25% drop in operating costs. So it's very impactful, such a small amount, effectively sweetener for the overall project.
And if I could ask just about the last page on the presentation deck from Sprott in July, there's a photo. Page prior to that too, there's a view across San Antonio, beautiful. And I'm wondering, is that last page, is that the same view from another direction? Is that also at San Antonio, or what are we looking at in that last page?
So the last page on the back, the hot chili details are, yes, I mean that's actually sitting in a little area of the valley where a lot of the accesses to the mine you're sort of looking towards the southwest. So you can see a number of the decline and exposed historical levels that have been shown in that face. So it was really extensively mined over shallow depths. Of course, this was mined generally in the 1960s, and the copper price was very, very low. So the majority of the mine was high graded, and what we're seeing in the drilling is a hell of a lot of remnant material in that top 100 meters that was mined. But of course, the really interesting thing on this deposit, of course, and our last announcement put out a cross section. The deposit is dipping a lot shallowly than we had originally interpreted, some 30 degrees or 40 degrees off to the east. And of course, that's the dip of the hill. So the strip ratio on something that's, probably bulking at about 1.5% in our results, but probably, I imagine that we'll see more 2% material over really strong widths, within 50 meters of surface in our deep holes. So, when you've got that kind of a low dip, you also have a higher tonnage per vertical meter, and of course, it's perfect for and very amenable for open cut mining. To be able to have such a large source amenable to open cut at a low strip, yes, it's putting a lot of smiles on our face at this stage.
And any underground sampling, wall, chip, or channel?
Yeah. So we've been very active on that front. We actually had all of the underground that's accessible resurveyed now over the past 7 weeks or so, and we've also had actually a very experienced geologist, professors from the University of Copiapó. Has been underground mapping the lithology alteration and undertaking an extensive amount of channel sampling. So that information we haven't put out to the market yet, but I imagine it, holds a few jewels in it. We've also been doing an extensive amount of surface exploration, as you would have seen in the announcements. So a bit more to come out of there. But we have the drill program to come back on San Antonio. But of course, we everyone else now with technology available have a portable XRF on site and very good geology that give us early eyes on what we can expect to see coming.
Mr. Christian Easterday, Managing Director, Hot Chili, HCH on the ASX. Thank you very much.
Thank you, Peter.